Hi all, this is Steve Miley, the market chartist on behalf of forextraders.com, and we're going to take a look at both the pound versus the US dollar and the New Zealand dollar versus the US dollar, both of which were weakening off at the very end of last week, both of which now signaling risks of a more negative tone. The initial US dollar weakness in here we saw, so that's pound and New Zealand dollar rebounding after the FOMC meeting on Wednesday 21st September, but the negative tone that we saw on Friday for both cable pound US dollar and Kiwi dollar US dollar, both leaving risk for more negative shifts in here for these currency pairs. So looking at the pound first of all, very much aiming back at this recent setback low in here, but critically this 127.91 level. So having probed lower in here on Friday, if we go in onto the intraday chart, actually you see the market getting down close to that 128.64 level and real risk down to 127.91. And bigger picture, remember that is a multi-decade low, so real threat for a push down there. If we go to the New Zealand dollar in here, initially the daily chart showing the market breaking this trend line support that comes up from late May in here, and really threatening this 72.00 level. An intermediate term bullish theme is intact whilst above 72.00, but real risk of a topping structure, and the market already threatening that top by breaking down through this neckline support in here, having already surrendered this other trend line support that comes up from late July. All of this signaling a more potentially bearish theme in here, and that would be signaled below 72.00, shifting the bigger picture outlook to more neutral, with then a threat of a more bearish shift even below there, down at 70.84. So negative tone certainly for both the New Zealand dollar and the British pound in here versus the US dollar as we go through into late September. This has been Steve Miley, the market chartist on behalf of forextraders.com, and I wish you a great trading week.